Hello and welcome. You're watching Your Trades, where we give you a roundup of trading session as well as tell you how should you prepare for tomorrow's market. Mansi, a day of last minute surge where you can say fours and sixes coming in the last 2 hours and Nifty closing around 147 points higher.
Absolutely, Ankur. While we start scenarios.
Yes, definitely. At least one-way market is good to see, and especially being on the green side. We also have with us Ajit Mishra, SVP Research, Religare Broking, to discuss about the market. Mr. Mishra, today's closing above 24,800 if you talk about Nifty, and even the support which has come from Bank Nifty, which was not there at least for last couple of days. How do you assess the markets now? Which are the levels to watch?
Hi, good afternoon, Ankur. Good afternoon, Mansi. So, yes, it was a day of relief because in the last 3 trading session, in fact, for the last 4 weeks, we are continuously seeing that markets are drifting lower. See, today, I believe it's more of a breather instead of outrightly a bullish session, considering that heavyweights were oversold and as like you rightly mentioned that banking was slightly also in the back foot. But today we saw that the existence of critical support of 100 EMA on the Nifty index, which Nifty tested at the early trade, close around 24, 580, 570 area, that helped to some extent, which further improved with the recovery in the banking and financial majors. It's not that only banking and financial. In fact, across sectors we saw the buying interest emerging and recovery, reality. Energy counters, metal counters. So it was a broad-based recovery basically. But to sustain this and to extend this, we need strength, especially in the heavyweights from the banking basket. So 56,000 is very critical in the banking index and 24,550 in the Nifty. So in case if we see further recovery, 25,000, 25,100 will be the area where again the selling might resume. So as of now, I'm assuming that it's going to be more of range-bound session in days to come, considering that we have the monthly expiry also scheduled. But on the stock-specific front, market is offering decent opportunities on both sides. So one should be largely focusing on that aspect.
So these are the important levels to watch out for where the indices are concerned. But yes, not to forget to practice caution as the markets will stay volatile in the coming days as well. We are in the monthly expiry week. Ajit, good afternoon. Talking about Asian Paints, the company did report inline Q1 set with profit below estimate and flat revenue on account of shift in mix. Subdued demand weighed in Q1, but it was the management commentary which helped the stock during the session and also after the results came in. All in all, it was a flat set for Asian Paints, but the stock was performing on the back of the positive management commentary. One, your view on the Asian Paint, major Asian Paint, and also your trading ideas, if any.
So, Mansi, it's been almost several months now that we are seeing this underperformance continuing in Asian Paint, and in fact, earlier we were seeing more of consolidation. But in the last couple of months, we were seeing a bit of recovery, but it's still subdued, means we are still trading below the major averages. Currently, we are hovering around the 200 EMA, which is around 2430 mark. So let's say, in case if it manages to hold this area and make a decisive move, only in that case we can see some further recovery. But overall trend still looks sideways to negative to us. So, in case somebody is holding longs, the ideal situation would be to look for exiting opportunity around 2550, 2600 zone. At the same time, do maintain a stop at 2300 mark. And coming to the stock specific idea, I still feel that one should be slightly cautious considering that volatility is likely to remain high. And we have the monthly expiry also scheduled in a couple of days. So pharma is definitely giving us comfort wherein we are seeing sustainability of the trend and continuation of the move. So Dr. Reddy, after the recent dip, we have seen decent consolidation followed by a recovery. So we expect this recovery to further strengthen, and 1360 is what we are eyeing in the near future. So with stop at 1270, one can go long in Dr. Reddy's at current levels. And another stock from the defensive basket, HUL. So after the initial recovery move, there was a marginal pullback. And again, we are seeing a buying pivot formation. So possibility of a next leg of a rebound is there. So 2530 is what we are eyeing in HUL. So with stop at 2410, one can accumulate HUL as well.
HUL and Dr. Reddy's are the picks coming in from Mr. Mishra. Thank you so much for joining at this hour and sharing your views. Now let's hear some more words of wisdom. Government-led infra investment is seeing growth. That is what has been told to us by.
And on that note, it's a wrap on this edition of Your Trades, but there's a lot lined up on the other side. It's a goodbye from me and Ankur, but you stay tuned with ET Now.